Let's talk about IRAs. There's basically two types, traditional and Roth. Basically on the test questions, you'll see it listed as a traditional IRA or just IRA. It means traditional typically. But if it is a question about a Roth, it will say Roth for sure somewhere in the verbiage describing the plan. So just be aware of that. This is a situation where you're going to have a lot of similarities, but then there's going to be some distinct differences, and the test will test you on both the similarities and the differences, so you really need to know these. So let's start with traditional IRAs. First thing you have to have is earned income, proof that you have earned income. Okay, that's pretty good. Now, contributions. Contributions are always going to be considered to be made pre-tax, meaning before taxes came out. You can make contributions to a traditional IRA up to age 70 and a half, and then you must stop. On the contribution, there are limits as to how much money you can make and use that high dollar amount for how much you can actually contribute into the plan. It changes year to year. Most states are no longer testing on the exact contribution limit, so just understand there are limits. And the nice thing, one of the main reasons people like traditional IRAs is the fact that the contribution is deductible, meaning you can use it to lower your adjusted gross income before they figure out your taxes for the year. Usually it's fully deductible. Sometimes it'll be partially deductible. Another time it might not be deductible at all, just meaning you don't get that tax break on your tax return, but you still can make the contribution because remember, you're saving for your retirement. Okay, your accountant or tax preparer would be able to help you figure out if it's fully deductible, partially deductible, or not deductible. With the traditional IRAs, it is a form of a qualified plan. So you don't want to take money out before 59 and a half. You don't want to do that on any qualified plan because if you do, you are going to pay a 10% penalty for early withdrawal. Same thing applies on traditional, just like on the other qualified plans. And you must start taking out withdrawals. If you haven't taken it out before, you must start taking money out at 70 and a half. It's a requirement for a traditional IRA. So that's why you no longer put money in. You're forced to start taking money out at 70 and a half. And as I mentioned, don't forget there's a 10% penalty if you take money out too soon, before 59 and a half. Roth IRAs. With a Roth IRA, you have to have proof that you have earned income. That's the first requirement, so that's pretty easy. Now, contributions into a Roth are considered to be made with after-tax money. That's different from a traditional. Make sure you catch that. So Roth IRAs are considered to be made with after-tax money, money you've already paid tax on. Another thing that's different with the Roth, you can continue to make contributions beyond age 70 and a half. There is no mandatory required minimum distribution, is what they call it, on a traditional. There is no required minimum distribution for a Roth, so you can continue to contribute as long as you want. They do have contribution limits, how much you can contribute based on how much money you make. You don't need to worry about what that is usually anymore. But the interesting thing with the Roth is the contributions to a Roth IRA are never deductible, meaning you cannot use your contribution to lower your adjusted gross income tax amount that you have to pay. So that's another unique feature of a Roth. It's different from the traditional. The withdrawals are treated differently as well. Remember, the contributions you put in here in a Roth are considered to be made with after-tax dollars. So, and listen carefully, any contributed dollars that you put into a Roth IRA, you can take out at any time. No penalties, no tax. You've already paid the tax. So anytime you want to take out at only what you've put in, not the growth, not the earnings, but just your dollars, you can take them out whenever you want. No tax, no penalty. Then let's talk about what they consider to be a qualified distribution from a Roth IRA. To make it a qualified distribution from a Roth, you have to have had the Roth for at least 5 years. That's number one. Number two, you don't start taking the distribution until 59 and a half, because if you are going to do this qualified distribution, money has to have been in the Roth, or the Roth has to have existed for at least 5 years. You take it out 59 and a half or older, and as long as you follow those parameters, it's a qualified distribution. You will never pay tax on the growth, and you will never pay tax. You've already paid the tax on your contributed dollars that you take out. So that is a qualified distribution from a Roth. Very different from a traditional IRA. So again, make sure you are able to compare and contrast these two types of IRAs. You will have test questions on them.